Should you sell short on a meme stock basis, Meta Platforms, Meta stock? I've been seeing this pop up in my FY pages and other things. Individuals think they can turn Meta into a meme stock and sell it a la AMC, GameStop, things of that nature. Mark Zuckerberg has done everything he possibly can to label anything Chinese national security risk so that he can dominate here in the United States. He's not allowed in China, so he's made it his mission. Fine. Unfortunately for Mark, that's probably not going to work out. The app looks set to be blocked this coming weekend. Unfortunately, that's really not going to stop anything either. Everybody's app is still on their phone. Everybody's app will still work. The hosts are no longer here in the United States. About the extent of what this actually did. Given that, from a meme stock basis, should you sell short Facebook? One of the biggest companies in the stock market. You've got a lot of competition, number one. Number two, has there been a pricing in of all this gravitation where there's expectations of future growth? Has that been baked into the stock? And because that gravitation is now going to red note, which theoretically would be banned as well, and isn't really available here in the United States, all their servers, I think, are in China. How does this affect Meta stock, and would be going short Meta Platforms be a good idea? I think no, in a big way. When you break down the finances of Facebook, it's appropriately priced. Given that, notwithstanding, will the economy begin to contract and therefore Meta Platform stock move lower anyway? That's a good possibility. If the economy starts to contract based on Trump's policies, revenues for companies will decline. They'll miss their long-term projections and Meta Platforms could move lower. Let's jump in. Here's a quick look at Meta itself. I think this is the 4-hour chart? Yeah, 4-hour chart. So it goes back a couple weeks, all the way back to October. Gives you an idea as to what's going on here with the stock. It's been kind of moving. We got of course, Christmas rally and the Trump bump, and a lot of stocks have been moving in tandem. Nothing really stands out here too much. Meta Platforms is releasing their earnings, and I think it's next week. It's coming up real fast. So getting in front of that particular number is something that I think a lot of people might want to consider thinking in terms of the meme movement. As I said in the intro, I use an app that is no longer function here in the United States via the Apple Store. All right, and I just got myself a new iPad Pro. And one of the first questions I had, it's a crypto app. They don't comply with U.S. financial regulations, so it's no longer available here. Americans are not the target market. I use an offshore entity, Panamanian Trust, with my IRA account to invest my crypto. That's my long-term investments. I do other kinds of things inside that. I don't have to pay taxes on it, which is really great, but I can't pull any of that money out, which is also really great, but it does have its downsides. I will get there, of course. Whenever I launch the app and there's any kind of issues, like updates, it asks me straight up, do you want to update? There's a new version available. Yes, I do. I hit the button. App works perfectly fine. It's being hosted somewhere else in the world. So this ban from the United States really amounts to a big old fat belly flop. Nothing can really be hosted here in the United States to protect Americans. It's actually more so to protect Mark, of course, but I get it. Regardless, en masse, everybody moved over to a Chinese app, which is, I downloaded as well, which could fall under this ban as well. It's really kind of a social media app exceeding 1 million views per month or something like this, users. And there's thresholds, minimum thresholds, which clearly this red note would fall into and could theoretically be banned as well. I don't think anything's being hosted here in the United States, but it is on the Apple Store, so yeah, that would go away. Now again, my iPad just got it. Question is, that app that I use, the crypto app, is on my iPhone. How do I get it onto my iPad? All I did was I went into purchases, previous purchases in the Apple Store. Voila, it's right there. Just hit the download. I already have the rights to it. They can't really take my rights to it, even though it's a free app. Moving right along. Meta's really not going to get that much of a bump out of this, but there will be some. But a lot of people basically made their opinion known about Mark. No, not interested. These apps are bottom up versus log into Instagram. You're getting hit with major magazines, sponsored this, sponsored that. You're just getting hit with top-down kind of content, and a lot of people are just sick of it. They don't want it. I don't. I rarely, if ever, look at my Instagram account. All my Instagram account is for is when I want to save a company, I'm like, hey, I'd like to buy that later on. Maybe. Let me mull it over for 6 months. So Meta Platforms itself. Now, I really started looking at them back in 2021. There was a huge sell-off in 2022. And I really cherry-picked the bottom. If you look at my content, my videos from previously going into 2023, I'm like, this is ridiculous. You want to buy this thing like crazy. And that worked out great. It's since has just kind of kept going regardless of everything else. But we're looking at XLK here. So this is Meta Platforms is the bar chart. XLK is the technology sector ETF. If you want to play the broader ETF, or the broader sector itself, this is a great way to do this. Now, Meta isn't in the tech sector. It's in the communications sector, and I'll show you that in a second. And it's really, the communications sector is kind of a drag on everything itself. Here is Meta versus the same chart, XLK, technology sector. Meta is not officially in the technology sector, but also versus QQQ, which of course is NASDAQ, the top 100. Meta has, over the past couple year, outperformed QQQ. Just to kind of bring it into focus here. Is Meta overpriced based on what's going on? Truth is no. Meta Platforms itself has not got any kind of bump out of this potential ban when you look at all the other big players that are out there. No need to break it down. This is within line of everything else. Again, here is the communication sector, and you can see Meta Platforms dead smack in the middle, right above Match.com. Netflix, they're in there. Charter, Comcast, Walt Disney, Verizon, Warner, Paramount, Live Nation, Alphabet, Google. They're all in there. Kind of gives you an idea of what this actually is, this sector. But it's considered a technology stock. Just look at QQQ. A lot of these bigger players have outperformed QQQ. Meta isn't really an outlier. All right, so projected revenue for 2024, we get Q4, I think next week or the week after. I don't remember this specific date. I'm not playing this move. 2025, 186. 2026, 210. Net margins. Now I threw Mark a bone here at 40. It has been a bit higher. Revenues have been a bit higher. So maybe Meta for this quarter comes in slightly higher. Even so, if they come in at 35, this is a cash cow. So for every dollar Mark's bringing in, they're keeping at least 35 cents, maybe as high as 40 cents. We'll find that out in just a few days. What I want to know is earnings per share. 674 is the projections for Q4. 2267 is 2024 with Q4 added in there, but 2025 is what I really want to focus on. $25.35. This is what you're basically buying going in through all of 2025. You're asking the question, will Meta on a projected revenue earned the 25.35. And as you can see, there's not really that much of a bump there versus 2024. 2024, the ban already exists in theory. It's just a matter of executing. 2025, there's not that much of a bump. So there's nothing really baked in there from this ban where Mark's going to sit there and just garner all this new content, eyeballs, and from that revenue. It's not there. But that 2035 turns out to be fairly important. All right, the United States 10-year Treasury yield is trading at about 4.65%. And I think that's going to stay pretty high. First, I always look at the economy. First and foremost, always. What's going on with the economy? We have what some would term a catastrophic event occurring starting January 20th with what could be the tariffs. This is a self-inflicted wound on the economy. Tariffs are a tax. Incomes are finite, and therefore increasing taxes on imported goods would be a zero-sum game. What consumers cannot spend in the economy because of a tax, although that tax would go toward the deficit reduction via the tax cuts that are necessary, about $4.5 trillion they're expecting in the next 4 years. Despite that being there, that zero-sum aspect of the economy means that the eventuality, the economy will move, the growth rate will be lower and lower and lower. Your alternative to this is a pretty high 10-year Treasury yield at 4.65%. If you look at the earnings per share projection versus meta price, you're looking at 4.147%. So on the one hand, the U.S. 10-year Treasury, which is the benchmark, you can buy into it for the next, say, 2 years and say, you know what? These asset prices are pretty high. The economy is going to slow down. Stock prices are going to go lower. You could buy in and get earnings per share at $25 from Meta platforms. But your downside to the stock prices is much higher. Therefore, that 4.147 holds a lot of risk. Eventually, it will move back up higher. If we do see a downside, wouldn't you rather buy Meta platforms at a discount? Your 4.65 US 10-year Treasury yield, it's not exactly the sexiest investment. But losing money because the economy constricts itself and moves lower, that's definitely not sexy either. This is your benchmark Treasury rate. And what's going on there is with the shift we have in policy, and the Federal Reserve has already made that known that they're concerned about this shift in policy, they're not going to lower interest rates further. With higher interest rates, the economy will contract. So revenues will not be hitting these projections. Mark will miss his projections. Not his fault. It's because the economy will contract and the stock market will move lower. So the 4.65%, if you're really persistent and you really want to outperform the economy, that US 10-year Treasury yield, which might move a little bit higher, but I think we're probably close to about where we need to be. I don't think we hit 5%. I've been saying that for a few videos. I think this is where the Treasury is going to be, but I do believe Meta platforms with all other stocks will move lower simply because of the economy contracting. This is one of the things that the Federal Reserve is trying to do, is reduce the rate of growth with the economy because it's too hot right now. We just printed 265 jobs. This will have an effect overall with the Federal Reserve having to maybe even pivot and move interest rates higher, and all of a sudden all stocks come down lower. The meme stock aspects, that's not baked in. If you take that trade, I think you're going to take it somewhere else too. If the economy moved forward, Meta price right now is actually fairly appropriate. The economy is not going to continue to move higher and higher and higher. I think there's going to be significant shifts, and they start Monday. And I think Meta stock, along with every other stock, moves lower, which makes that 4.65% real interesting for those who are looking to move money. Savvy institutions will do exactly that. They'll start getting out of their stocks. They'll start protecting their money and actually grow it, buying into treasury yields or other government debt or other business debt, corporate debt. This stock moves lower, but not because of a meme basis. And I laughed at that. I thought that was ridiculous. Meta is one of the largest companies in the world. This is far too few people betting on something. But the thing is, they might be right that the price moves down just for all the wrong reasons. Make sure to hit that like and follow button. If you're looking for this kind of content, I've got my Substack newsletter down below. You might want to follow me on Substack, which wouldn't get you the email, but it would get you the information as to when I update things on a regular basis, along with the hit and like and follow here as well. We'll see you in the next video.